years, Domino's has dramatically outperformed the general market. Yet you don't hear a lot of coverage about Domino's. You don't see thumbnails with pizzas on the thumbnail over and over again.
Today we're going to be talking about why Domino's Pizza has been a fantastic stock to own. Spoiler alert, we won't be discussing if Domino's has a great business model. We already know they do because of their phenomenal results these past couple decades. Instead, we're going to be talking about what really sets them apart. Later in this video, I'll share Domino's returns versus the S&P 500, and I guarantee you will gasp in Spanish. Domino's Pizza, if you couldn't tell by its name, is a pizza chain restaurant founded in 1960 and is currently headquartered in Ann Arbor, Michigan. The Domino's brand is one of the most widely recognized consumer brands in the world. Domino's is actually the largest pizza company in the world based on global retail sales. In addition to being the #1 pizza delivery company in the US, their stores are in areas that cater to a majority of the US population. They collectively sell about 3 million pizzas each day. Man, that's literally a lot of dough. In 2009, Domino's actually redesigned their pizza recipe, which they believed is the reason for their continued growth in customer reorder rates and increased sales. Now let's talk about how exactly Domino's makes money. Now Domino's, they actually practice a franchise business model, meaning investors can pay Domino's a fee to license their brand name, menu, business model in exchange for giving part of their revenues, called royalties, to Domino's. Generally, the royalty fee that Domino's charges is 5.5% of all sales. 98% of Domino's stores are franchised out, while Domino's Corporation outright owns the other 2%. This is the first step in why I believe Domino's is so successful. They allow franchisees to be responsible for all control and running their own businesses, which means Domino's has to put very little of their own investment into these stores, yet they still get a decent return in royalties. They also charge their franchises a fee to run all those Domino's advertisements you see all the time, those that make you hungry and those that make you just want to order some pizza. Currently, that fee is 6% of all store sales. Right off the bat, we've established that Domino's, as long as they have stores operating, are making money from royalties, and they also have their whole marketing budget paid for. Another interesting yet genius way that Domino's makes money is selling their food, equipment, and supplies to franchise owners through their supply chain operations. We've heard of the picks and shovels metaphor to get rich, but Domino's is literally supplying the picks, shovels, and gold, and some people would rather prefer having pizza rather than gold. Supply chain is actually where 59% of their revenues come from. It's in the franchise's best interest to just use Domino's for their products, as they will deliver the food, equipment, and supplies to their US and Canada stores. We're talking about those tasty cheeses, the meat, the wheat, the vegetables, and of course their secret sauce. There's also a franchise profit sharing agreement when they choose to do this option. Supply chain operating margin is only 11%, and this is why people don't love these fast food business stocks. It's not because they aren't profitable, it's because that their margins are usually very low once these expenses are taken into account. But that's where Domino's strong business model comes into play. Domino's stores are often very minimalistic. They're designed for carryout and delivery, which means less capital has to be invested into the actual store location, the furniture, making their menus all fancy, a drive-through, etc. When's the last time you actually sat down in a Domino's? They don't need to focus on having a top-notch building or a decorative storefront. Just having a simple menu at affordable prices that basically anybody can afford is what they're after. One of the reasons why I believe Domino's has done so well is because pizza is a celebratory food, similar to Coca-Cola or drinking alcohol. It's usually portrayed in a feel-good, community-based setting. Pizza is often the food that's served in celebration or in meetings. I remember me as a college student, every student organization had pizza served as a way to get people to join the club. It's cheap food, but it's filling and it's tasty food. That's why they continue to be a recurring revenue stream for Domino's. Domino's practices a fortressing strategy, which is increasing store counts in existing markets to provide better service to customers by shrinking delivery times and being close to customers for carryout. Technological innovation is something that the pizza chain has taken very serious, as you can now order a pizza through Google Home, Facebook Messenger, Apple Watch, Amazon Echo, Twitter, and many, many more services. Domino's even has its own GPS tracker, which gives turn-by-turn precise location of where a customer's pizza is for delivery orders. Have we become so fat as a country that we need GPS on our pizzas? Is just having a normal ETA of 30 minutes not good enough? No, we need to have the exact location and timing of our pizza. Domino's just launched an autonomous vehicle called R2 to deliver food around the Houston area. This is a test to see how well the technology and customer interactions work before it expands everywhere. Now, I keep mentioning pizza, but Domino's does serve more than just pizza. It also serves chicken wings, sandwiches, pasta, breadsticks, dessert, and soft drinks. In fact, for preparation for this video, I got some Parmesan chicken wings for lunch today, and they were pretty fire. I got 8 wings for $8. That's not too bad. Domino's may already have over 17,000 locations worldwide, a vast majority which are located outside the US, but they still believe that there's plenty of room for growth. They only own 22% of the total pizza market share, 1/3 of the delivery market share, and a mere 15% of the carryout market share. You might even say there's a piece of the pie available for everyone. Most of their competition is independent pizzerias that may just exist in that particular region. And worldwide, they face competition from Pizza Hut, Little Caesars, and of course your boy Papa John's, who's always in the headlines for the wrong reasons. One choice that's always a great decision though is hitting that like button and subscribing if you haven't already done so. As promised guys, I want to discuss how amazing Domino's returns have been since it IPO'd in the summer of 2004. A $10,000 investment back then would have grown into $616,000 today. That is a 6,000% return on your money, or an average annual return of just under 28% with the dividends reinvested. The S&P 500 in that same time span would have netted you just $51,000 or 10% annually. Now, we joke about stocks on this channel 10xing, but this is a true example of one that actually did it. I wanted to see just how great of an outlier Domino's was, so I compared them to the best stock that I could think of that everybody knows has great returns, and that would be Amazon. And while Domino's Pizza doesn't quite beat Amazon in total return since 2004, it does come quite close at 28% annual return for Domino's compared to Amazon's 29% annual return. Yet I always hear people talk about how great of a stock Amazon is, and it really is a great company, but I never hear anybody talk about how great of a stock Domino's is. And that's what I love about the stock market, is that often it's these stocks that nobody ever really talks about that do so well. If you really take the time to research and find great businesses, even if it doesn't get a lot of buzz, it has the chance to make you rich. It doesn't have to be those sexy stocks. $1 million return from Domino stock is worth just as much as $1 million return from Tesla, Bitcoin, or whatever penny stock they're hyping up these days. And unlike Amazon, Domino's actually pays a dividend, which is currently under 1%. They stopped their dividend during the late 2000s recession, but continued paying them in 2012 and is now on an 8-year streak of annual dividend increases. As if you needed any more reason to like this company, they have a 20% 5-year dividend growth rate, and their payout ratio is a measly 29%. They have also consistently been buying back shares around $500 million each of the last couple years, and they also just authorized another $1 billion this past February. It really seems like returning shareholder value seems to be a top priority for this company. Now, despite all their success, Domino's at the time of this recording only has a $15 billion market cap, which is just amazing after a 6,000% return since their IPO. Domino's is already up 5% since the year started, and it looks like they have no plans of cooling down. I'd love to hear what you have to say about both Domino's the stock and Domino's the pizzeria. I personally love their food, shout out to that sausage pizza, but I also know some people hate them and they prefer the other popular pizza chains. If you've enjoyed this video, please consider dropping a like, comment, and subscribing, as these videos take me a long time to produce, and just doing a simple thing like that really helps me out. Remember, you can catch me wherever you get your podcast under the Collect Cash podcast name, and I'm also available on Instagram under the Citizen of the Year title if you ever have any questions. I'm about to go eat more pizza, but I will buy, stash, collect cash you later.